morning, all. I'm Epstein with your Morning Flash Update, and this update is for the morning of Wednesday. And we're sitting here now on, let's get this straight, the 31st of January? Yeah, January coming to an end. Wow. It is 2024. It's 8:15 a.m. Central Time. And we had a lot of economic data early in the morning. You know, what we've been dealing with, and I'm sure you've been seeing it, is the earnings coming out. And the mega companies, they're not hitting it. So the market is so priced to perfection in them that if they miss, even if it's a good set of numbers overall, it's a miss. And a miss is punishing at this level. Now, are we getting to the point where maybe these markets have gotten up so much between the November, December, and January rally that they're starting to run out of momentum? That's the thing that I'm watching very carefully. When we take a look right now at the morning economic data, and then we'll come back to the charts, we have the mortgage market numbers, and they're down. You were down in the index, 7.2. You were down in the purchase index, 11.4. And the refi went up a little bit. But remember, it's January. It was a cold January a week ago. We're warming up right now. Spring is 48 days away. It's hard to believe. And that's like the opening of the real estate market. So we'll see what happens. ADP, the Fed has to like this number. Their U.S. private sector jobs only up 107,000. They expected up 150, and this is way down, a third less than we saw in December. Now, putting it in perspective, 100,000 jobs is a good number. But it's not the inflationary number. It's not the strength in the labor market that used to be there, as you can see. Fed will be looking at that comfortably. The employment cost index, well, up 0.9. They expected up a full point. So that's an improvement. The prior quarter was up 1.1. The employment cost index year over year up 4.2%. The prior quarter was 4.3. You were down 0.3 in the wages. This is all the data that the Fed wants to see, and the benefits were lower. This is moving in the direction the Fed wants to see big time. Chicago January PMI data, well, that'll come out at 8:45, and at 1 o'clock, ta-da, we get the FOMC statement. At 1:30, the press conference. Remember the yin-yang effect. When that 1:30 conference begins, it's 6:30 to 7:30 in different parts of Europe. Asia's asleep. They'll wake up later. They'll react to whatever we said. That'll go back to Europe, and by the time we get it in the morning, you're through with the yin-yang impact. But always pay attention to that. Gold up another $10. Now to talk about what's going to happen. Iran saying they are ready for whatever the U.S. does, and they will retaliate. Over what? They're the cause of the problem. In the silver market, up 5 cents. Copper jumping again. Now, I just saw home sales for January in China crashing. I mean, they're half of what they used to be. I write about it in today's report. But this is all about new stimulus measures and markets forward-looking, not backward-looking. Dollar index waffling, same in the yen. It tried to break, it's not able to do it. You're just sort of sitting here marking time now as we wait what the Fed's going to do. And you can see bonds and notes getting a bid into them. A bid is a good thing. It means interest rates are dropping. You're still under selling pressure in the grain market. And on the energy market, now you're staying over 82 in the April Brent, but you're not running anywhere. And obviously, we saw yesterday that Saudi Arabia is taking away the increasing of production facilities there. It's a sign that they're saying problems. Now, this morning I looked at a number that I didn't realize. I think it's something like 14% of all trucks, the F-150s and that, are using electricity in some type of manner in them. I think that's a pretty impressive number. So they're embracing that more than most. You're finally getting a bed in natural gas. I just think the $2 level looks a bit sold out. Not sure what's going on in heating oil because the weather, we're going to be 50 degrees Thursday. You heard me, 50 in Chicago. This is insane. The swings, but they're warmer swings than that. It's the El Nino impact. Soft still holding up rather neatly. So One of the things you want to pay attention to in markets like this is learning these indicators I always talk about. And if you look at this, we've put together our volume guides 1 and 2. When you look at it all, you can see all the different types that you get through here, all the different parts that are in it. Price-time relationships, another word, by the way, for the Arun indicator that we have a free course on. Your options primer, money management. Boy, is that very important. I'm using actually artificial intelligence right now in building a new technique to take advantage when you lose embedded readings. Can you catch a swing in the market, all based on AI? So we're doing that right now. I wish I could say we're further along. We're good. I'm hoping to have something this quarter. In any case, go to iraepstein.com under free offers. This is all there. Move your cursor to the top here. You can take advantage of it that way. And with that, I'm Ira Epstein. I will talk to you at the end of the trading day. Remember, 1 o'clock, FOMC meeting time. Bank of England coming up very shortly with their meeting. Remember that. And then Friday, jobs report. Take care.